All right. Today's SPY was a very exciting day of going absolutely nowhere. We went up a whopping 0.01%, so a very thrilling day of price action. And overall, I'm still looking for this possibility that we are just going to get a very shallow pullback towards support and then continue higher and get that breakout to a brand new all-time high. Now, you might have noticed today that the market tried to gap down and it looked like it was going to be a bearish day. And I think that's going to head fake a lot of people, because one thing a lot of people are failing to realize is that there are too many people bearish on this market. And if you do not believe me, go in the comment section below and let me know if you are net long the market, sitting in cash, or net short. If you actually think about who is selling, it is not people that own shares. It is people trying to short the market, which means once we break through the resistance, we're just going to squeeze out the short sellers and we are going to get a very strong explosion higher. The reason this is true is because back here on Friday, April 19th, the market had a form of capitulation. And what that means is that everybody that wanted out of this market had already sold and they're already out of this market. And if you look at this price action as we've been going higher, this is the type of price action where there's a lot of indecision and a lot of people are not sure if we're just getting a dead cat bounce and then resuming a correction to lower prices, or if this is price action that is starting to build higher lows and higher highs within a bull trend. And where we got the clarity is when we had this bull breakout and this bullish impulse that broke through that resistance. We now have all of the moving averages with a positive slope, price actions above all the moving averages, and we are right back on the bull within a very swift motion. And that is exactly why retailers continue to miss bull rallies within bull markets, because they're so worried about all of these bearish outcomes. And there's all of these people that are really loud bears that scare the ever living hell out of you that the market's going to crash and the correction is going to be so deep. And oh my God, the whole entire world is going to end. You need to sell your stocks and you need to get out. And then the next thing you know, you blink your eye and we're at brand new all-time highs and you missed another bull rally. So if you follow this channel, you know that is not what I do. I do not do fear mongering. We strictly follow price action. And I told you, do not rule out these bullish scenarios because we are in a bull market. And I referenced the weekly chart when I told you that, because if you looked at the weekly chart, it really just looked like a pullback to a higher low to find support before we went to a new all-time high. So I'm not telling you for 100% certain that I'm going to be correct, but I am telling you the odds favor that I will be correct, because we do have the bull trend and I'm trading in the direction of the trend. I'm not trying to go against the trend. And right now, while the trend is higher, even if we get a pullback into support, that is going to be a buying opportunity within a bull market before we go even higher. You don't have to agree with me. Trust me, I know a lot of you don't, and you make it very well known that you're a bear, but I don't know why you're so proud of being a bear in a bull market. That's simply your way of telling us you're not making any money without telling us. So follow price action. I know a lot of you actually do understand what I'm telling you, and I know all of you joining the Discord server are sharing a lot of your testimonies on how well you are doing in this market, and it's really opening your eyes up to how trading price action is making a difference in your portfolio. And this is why I teach these things, because a lot of you are learning how to be profitable traders by simply following the chart, and you no longer need to fall trap to all of these talking heads, all of this noise, and trying to follow news headlines or what the next CPI data is going to say or what Jerome Powell just said last night on the TV. None of that matters. All that matters is following your chart and following price action. So I'm not changing anything about my prediction. I think any pullback from here is going to be a buying opportunity before we go any higher. And that buying opportunity on any pullback could have already been the pullback that we had today. Remember, there's a lot of people chomping at the bit to get into this market. So we could have a very shallow pullback, which means we may only go down to about 512 or 513, or we just went down to 515 and we're going to bounce off the rising 5 EMA. In a very strong bull trend, we may just stay above the 5 EMA and just continue to go higher. And the next upside targets will be the break above 520. That sends us to 525. And then if we continue higher, we go into the 530s. So stay on this bull as long as we have this bull trend, which means I think you should be staying bullish on SPY while we're above 512. And if we break below 512, then it's very easy to get risk off. And that's why I always tell you to move like water. Which means if we break down through a support level, just get risk off until we figure out if it's going back into a downtrend or if we're just coming down to a lower support before we find support to go higher. So watch 513 and 512. Those are going to be the critical supports. And right now, the resistance we need to break is between 518 and 520. On the NASDAQ 100 triple Qs, we had a very exciting day going down 0.06% with lots of extremely exciting price action. And here we are doing mostly what I drew out is that we would get this little bit of a pullback down towards 436, and then from here I think we're going to bounce and head back higher towards 448 and then 453. And yes, that is a brand new all-time high, and yes, I do think we're going there. So any pullback into support between 434 and 436, I do believe will be a buying opportunity before we go even higher. And you can clearly see from these moving averages and the price action that we are right back into a bull trend. So stable above 434, and I think if we break below that, you can get risk off because we will have a gap to fill down here below 428. But to make it very clear, this gap does not have to fill because this is a breakaway gap, which means during this bullish impulse, we had more demand than there was supply. So we gapped through that resistance. And that means this gap does not have to fill if it's a breakaway gap until we get a stock market correction at a much later date. So do not assume this gap has to fill. Wait for price to break below support, and then you can start to assume that gap is going to fill. Right now, if you're trying to short the market simply because there's a gap down there, you're going to have a very bad time if we just continue to run higher to brand new all-time highs. On the Dow Jones, we were up 0.45% today, and the Dow Jones had a bullish engulfing daily candle, which is a very bullish candle on the daily chart that told us we had way more buyers than sellers, and we are sitting right at the resistance at 391, and we didn't even come close to the pullback that I projected, which is that we could come back down towards 380. And now that we didn't get a pullback and we're pushing higher towards 391, it's looking more and more likely that the Dow Jones bulls are going to push straight higher towards the price target at 395, and then above that, we have a brand new all-time high at 400. So stay bullish, everything still looks bull across the board, and I do think we're going higher. On the Russell 2000 IWM ETF, we were down 0.58% today, and we did gap down, and we did not close the gap, so there will be a new gap up here at 204.5, and we also do have a gap down here at 200, but again, if these are breakaway gaps, we do not need to fill them, so it's more likely that we're going to fill the gap to the upside and then continue higher towards the price targets at 207 and then 210. So stable above 200. If we go down towards 200, that is a buying opportunity, and then just get risk off if we break down below 199. On the ARKK ETF, we were down 2.46% today, and this ETF has a lot of very bad stocks in it, and these very bad stocks are doing very poorly after they report earnings, so do not assume this ETF has to be correlated to the indices. I've said this before and I'll say it again, we just follow this ETF to understand what the bad stocks are doing, and it gives us a good idea of risk on behavior. If the bad stocks are going higher, that tells us that we have very risk on behavior in the market as a whole. So right now we're not seeing that risk on behavior, but a lot of that is due to these very large drops after earnings. Look at stocks like Shopify and Palantir and all of these other horrible picks in this ETF, and that is why this ETF is doing so poorly over the years. So right now this looks risk off if we cannot hold this support at 44, and then below 44 we'll be looking for 42 and 41. If we hold support and bounce, then we're looking for a gap fill above just right around 45.5. On the VIX, we were down 1.74% today, and I told you just yesterday in bull markets, we usually see the VIX crush down towards 12.8, and that is where you're going to want to start considering cheap hedges and cheap insurance, because that is where the VIX has typically been finding support. But as you can see, the VIX can spend a lot of time down below that level. So don't just assume that because the VIX is going lower that we have to see a bear market sell-off. It is very possible the VIX is just heading lower because there's no fear left in this market, and the bulls are taking over control and the bears are retreating to all-time highs. And as that happens, we don't expect to see a lot of fear in the market. So right now, the VIX is telling us fear is still leaving the market, even though I would tell you to be very cautious down here as it reaches support. That is typically where you're going to see spikes in volatility coming back into the market. On Bitcoin, we are currently trading right at 61,500, and I do think there could be more trouble in paradise for the crypto crowd because we have all of these lower high rejections, and we're starting to get some very bearish red daily candles on this lower high rejection. And you know that my analysis is that I do think we're coming down here towards 52,000. Now I can be wrong about this, and the way that I'm going to be wrong is going to be a higher low into a higher high, and that is going to tell us that we are no longer going lower. We've already seen the bottom. A higher low into a higher high above the breakout above 65,000 would tell us that I'm wrong, that we're going back higher towards a new all-time high, and that is when I would give up on being a Bitcoin bear. But right now I don't think you should give up on being a Bitcoin bear just yet, or if you do want to just wait to buy lower, that's completely fine as well. I'm not saying you have to go short Bitcoin, but just be aware it is in a very bearish configuration while it's below 65,000, and I do believe it's very likely going down towards 52,000 until something proves otherwise with the price action breaking that high. On Nvidia stock, we were down 0.16% today, and again, full bull trend. All of the moving averages are positively sloping, price actions above all the moving averages, and I do think we're going to a brand new all-time high between 994 and 1032, and I do think there's a very good chance that is all going to happen before earnings, so only a couple more weeks to get there. there. So just stay bull as long as we're above 877. And if we break down below 877, we need to hold 857. And if we break down below 857, then I would get risk off, because that means we're getting the bear breakdown and we're going lower. But right now, everything looks bull while we're above 877. And the next resistance we need to break is going to be up here in the 920s. On Tesla stock, we were down 1.74% today, and Tesla has finally reached my buy zone, which I told you was going to be between 167 and 173, and we did gap down today, and we took advantage of that gap down and got Tesla longs and did very well today on those. And I still think Tesla is going higher to fill this gap at 177, and then once we get the bull breakout above 185, we are well on our way towards the price target at 207. And I do think we're actually going to go higher than that, but right now I think this is a buy the dip zone. Get risk off if we can't hold above 167, because below 167 we could be going back into a downtrend. But I do think Tesla is going to take over. I'm telling you what my analysis is telling me at this time is that we're going to get a higher low and then get a bull breakout. So watch Tesla very closely between 167 and 173, and if you're a Tesla bull, this is where you want to try to load up on low risk long trades, and then just remember to get risk off and manage your risk if we break below support. On Apple stock, we were up 0.19% today, and Apple is doing a very solid job holding this support at 181, and I do think from here it's possible we don't even reach my lower price targets between 177 and 179, and we just start to run higher towards 190 to 195. I'm wrong if we break down below 181, and then we'll be looking for 179 and 177. And I'm very bullish on Apple. I do think it's going much higher, and I do think it's going to happen very quickly. So jumping back over to the S&P 500, nothing really changed about my analysis. I think any pullback from here is going to be a buy the dip opportunity within a very powerful bull market with lots of stocks that are still trying to go a lot higher. And I'm seeing lots of very positive developments on market breadth, and I think this is going to be a very powerful bull trend that a lot of people are going to miss simply because they're just way too bearish, or they're going to be shorting the entire rally and missing out on it and then realizing their losses when they get short squeezed. Now, obviously, I could be incorrect, but that is what I see, and that is my conviction in the market right now. So if you're going long, it's very easy to manage risk. You just get risk off if we break below support, so don't overthink it. It is really that simple. And if you want to come crush this market, come join us over at the Stock Channel Discord server. There are a lot of you joining and learning how to trade price action and sharing your stories about how you are doing much better and finally seeing those profits you've been looking for. So if you're still struggling to be profitable in this market, come check out my Discord server where you'll get access to all of my intraday updates and technical analysis as well as my trade ideas. You can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.